Investors are hitting the panic button. Insights on how to ride out this market. In today's cover story, tech takes a turn for the worse. Why the once booming sector is facing a slowdown now. And a top executive cashes in $91 million in stock and then hires an unpaid intern. A look at this controversy. Also, are emerging markets losing allure? That's all ahead on today's First Business.
You're watching First Business. Financial news, analysis, and today's investment ideas.
And for Tuesday, August 20th, good morning. I'm Bill Mahler, in again for Angela Miles. And in today's First Look, after last week's dive, market losses continued yesterday. The markets opened this morning looking for a little traction. Equities were lower for their first four-day slide of the year. Strength in technology trimmed Nasdaq's losses. Apple, by the way, up about 1.5% after saying it'll start selling 2 new iPhones next month. Energy shares were down. Oil futures fell, ending a penny below $107 a barrel. Gold futures, which were up 4.5% last week, dropped yesterday. Feels kind of like we're in a holding pattern. Well, we are. Investors are waiting to see what the Fed is going to do this week. Does Ben Bernanke have plans to pull back on the stimulus, QE3 as it's called, sooner than later? And with the school year beginning, here's a little sequester issue. And it means nearly 60,000 low-income children cannot enroll in preschool programs, mostly Head Start. Also, 18,000 Head Start workers have had their pay cut. Also, bond yields on the rise for months now. Let's talk with Doug Rothschild. He's with Performance Trust. So what's happening with treasuries? Notes doesn't seem to, bonds, everything seems to be changing right now as prices fall.
Yeah, Bill, it's an interesting time in the market. One, it's a quiet week and a quiet part of the summer as people wind out their summer vacations. And so there's not a lot of action going on. But two things we're noting is one, that the yield curve is historically about as steep as it ever gets. If you look back, almost 30 years, there's only a couple times in history that you've seen the difference or the steepness of the yield curve you see now, particularly between the 2s and the 10s. So what is that really telling you? The market's really watching, particularly this week. Wednesday will be the release of the Federal Reserve's minutes from its last meeting to see if there's any signs of language that the tapering program will begin.
You think the tapering will probably come a little sooner, maybe this fall. Tell us why.
Yeah, I think the likelihood of a taper is much stronger than it was even just a few weeks ago, and there's two reasons. One, the numbers are actually a little bit better. While top-line growth coming from the most recent earnings reports from stocks are not that great, not very compelling, you do see the unemployment number. The housing is also obviously better, but the unemployment reports are getting better. Weekly jobless claims have had successive weeks of improvement, and the last couple of unemployment reports are getting stronger. So they're starting to see inklings that the economy might be a little better. That's one. The second is a story or kind of a rumor that I'm starting to hear circulate that Bernanke is really looking out for his own legacy. And what I mean by that is if Bernanke tapers before he leaves office early next year, and in other words, taking the training wheels off of the economy, and the economy takes off and it works, he'll be known as the guy who started QE3 and then was able to stop it and started the economy going on the right foot. So I think he's looking a little bit out for his legacy. He may have a bias to start that tapering program a little earlier than we think.
Still a big dice roll as to how markets will react and the overall economy, too. All right, Doug Rothschild, thanks so much.
Thank you.
In its ongoing efforts to improve so-called stress tests on big banks, the Federal Reserve isn't yet satisfied. The Fed said yesterday that some banks still aren't taking into account the possibility of declining home prices when setting the amount of capital on hand. The Fed is demanding that banks take into account unique weaknesses and vulnerabilities that apply to a bank's particular operations.
Emerging markets are emerging as a concern for investors. India is sending some worrisome signals to traders as the rupee loses ground and stocks falter. The nation's government contends it is not on the brink of financial crisis. Traders like Joe Cusick say that they are seeing more red flags, including run-ups in commodities like gold, steel, iron, and copper.
If you start to see those metals start to come under further stress, that is giving a little bit of a signal that we could have some pullbacks here. Now, India is leading their way right now. We haven't seen it in the other BRIC countries. In other words, Brazil, Russia, or China at this juncture. They still have had solid upside moves, but this could be a signal, and we want to keep an eye on it.
Meanwhile, China is thinking about launching free trade zones in order to attract more foreign investors there.
This afternoon, Al Jazeera launches in the United States. Al Jazeera America will carry 14 hours of news every day over the old Current TV cable channel, which it bought earlier this year for $500 million. It's positioning itself as a source for serious, unbiased news. Many feel, however, that the Qatar-based company is biased. There are skeptics even among Arab nations. Egypt's interim government has shut down Al Jazeera's offices in Cairo after accusing it of threatening stability and national security.
Well, the government monitors your phone calls. Social networks are selling info about you. Retailers are tracking you with cameras and signals from your phone. Well, here's something else to now challenge your privacy: returns tracking. The Associated Press reports that stores like Home Depot, JCPenney, Best Buy, and others record every time you return something to a store. That data are used to make a return profile for each customer. So what do they do with this info? Well, they're looking for return fraud, which accounts for about $9 billion in losses every year.
The tech sector is in a slump. When the S&P 500 was up nearly 20% earlier this month, tech stocks lagged behind, up only about half as much as the rest of the index. Our cover story looks at how we got in this trough and when we're expected to climb out of it. Analysts say the wave of consumer electronics that began in 2007 with lines for the first iPhone and ended most recently with smaller tablets has for now ridden itself out.
I don't think that right now there's anything else that I really need. I think that I have the technology that I need to get by in my daily life. My phone still works really well, my computer works really well, so I don't think that I'll be purchasing anything new right now. That's not anything I'm saving towards or really looking forward to.
I have the Samsung S4. I have the new iPad. I'm content for right now, so I don't need anything else.
What analysts didn't expect is how quickly PCs, especially desktop PCs, would be replaced by tablets.
The market's both saturated at the moment and anticipating the new products coming out from vendors, particularly Apple.
The tech trough hit Walmart stores across the U.S. It blamed disappointing earnings earlier this year on soft results in electronics, media, and gaming. And Cisco Systems, which says business is nowhere near the pace it wants, plans to cut 4,000 jobs. So, will the next wave be as big as the last one? Will it be Google Glass eyewear?
I've actually seen someone who has the Google glasses. It's not something I'm particularly interested in right now. I just can't imagine that being something I'd use all that often, or that I'd actually wear the little thing.
Even if Microsoft's Surface tablet doesn't catch on as much as the company known more for its software had hoped, business at Microsoft should see an uptick due to a phase-out.
Microsoft ends support for Windows XP in the first quarter of the year. That is going to force a lot of businesses to probably upgrade to Windows 8, which will necessitate buying new hardware.
Another factor that analysts say explains part of the tech slump: both major gaming systems are undergoing updates at essentially the same time.
Pension funds and city officials from Detroit are in the midst of a big dispute. Kevin Orr, he's the city's emergency financial manager. He met with pension funds yesterday to determine the pension shortfall. Orr says pensions are underfunded by about $3.5 billion. The funds estimate the shortfall's around $600 million. A Detroit reporter tells us the meeting was likely the first of many.
This is an ongoing dispute, and I don't suspect that the differences between the emergency manager's numbers and the pension fund's numbers are going to be resolved in a meeting that lasts a few hours. My suspicion, again, this is just a suspicion, is that this will be the first of several of these kinds of meetings that will take place here in the coming days and weeks.
That was Kirk Pinho of Crane's Detroit Business. The deadline to file challenges to Detroit's bankruptcy eligibility was last night at midnight. Pinho says that the next battle coming down the line, pension funds that file challenges under grounds that the pensions are protected under the state constitution, and therefore Detroit never was eligible to declare bankruptcy.
Superstorm Sandy may have a lasting impact on both new and existing homes along the eastern seaboard hit by the big storm. President Obama created the Hurricane Sandy Rebuilding Task Force in December. It's tasked to assess what's needed to help people, businesses, and the region. The report, just released, recommends 69 policy initiatives. The bottom line: communities need to plan for stronger storms from climate change. The report also notes a need for new and existing infrastructure to be strengthened.
After 40 years in private hands, RE/MAX Holdings, one of the country's largest real estate franchise businesses, wants to go public. Yesterday, the Denver-based company filed for an initial public offering of up to $100 million, another sign of growing health and optimism in the U.S. housing sector. The company claims its 92,000 agents have sold more property in the U.S. and Canada than any other for 16 straight years. Its shares will be trading on the New York Stock Exchange under the symbol RMAX. The company founded in 1973 by Dave and Gail Liniger, who still remain in charge.
The country's largest real estate website buys a competitor so it can compete in the New York region. Zillow.com will pay $50 million for Street Easy. Zillow is reportedly seeking to expand in order to more effectively compete in the housing market that's heating up.
More scrutiny for Fannie Mae and Freddie Mac. A federal watchdog says that the companies are hiding billions of dollars of losses. An internal report from the Federal Housing Finance Agency points to delinquent home loans as the cause. Fannie and Freddie both have up to 2 years to deal with the costs associated with mortgages that are at least 180 days delinquent, and the report calls this time frame inordinately long.
LinkedIn, a networking site known to more than 230 million professionals, is opening its site to college-bound high school students. Students 14 and older will be able to create profiles on the site starting in September. It's also creating university pages. The company envisions these as hubs for prospective and current students, as well as alumni.
Washington already has the nation's highest state minimum wage, $9.19 an hour, and in Seattle they want to push it to fully $15 an hour. Now, you remember all the demonstrations across the country over the past couple of weeks. Low-wage workers are pressing for a nationwide strike on August 29th. Seattle City Council and candidates running for mayor there, they're all saying that they are thinking about doing this. Some businesses, though, say it'll put them out of business. Others say putting more money into more hands is just what the economy needs right now. Let's take a look at the earnings calendar. Look for numbers today from Barnes & Noble, Lazy Boy, Best Buy, JCPenney, Home Depot, and Dick's Sporting Goods. Still to come, corporate criticism, why a Facebook exec is under fire for hiring an unpaid intern. That's later. First, though, is America losing its edge in how our schools teach entrepreneurship? I'll talk with a senior lecturer who teaches at MIT. First Business continues after this. America, land of the entrepreneur, but is this country losing its edge in how entrepreneurship is being taught? The book, Disciplined Entrepreneurship, is just now coming out. It was written by Bill Ollett. He's senior lecturer at the MIT Sloan School of Management and the managing director of the Martin Trust Center for MIT Entrepreneurship. And I asked him, with all that he's done, all that he knows, what does he see that is so worrisome?
Well, what worries me now is, today America is at the forefront of entrepreneurship and actually teaching it. But the problem is that we need to have a scalable solution for entrepreneurship. Currently, 20% of the incoming students at Yale University want to become entrepreneurs. The educational system we have today doesn't scale to take 20% of the young population and teach them. We need to come up with new ways to teach them.
Let me ask you, though, entrepreneurship, I always thought it was something that you come to this world pre-wired. It's all by instinct. Is it something that can be schooled?
Well, thank you, Bill. That's a common myth that people have about entrepreneurs, that there's some sort of gene, that makes you an entrepreneur. The research is very clear. It's not whether your parents were, it's not some sort of personal characteristic. It's about a certain spirit and skill set, and you can acquire both of those. You have to have the spirit of a pirate and the execution skills of a Navy SEAL. And so people can get the spirit, but we have to teach them the skill set.
And we have huge demand right now. Coming out of the recession, there is a big demand that more of these people get into the economy, get jobs and start working.
Absolutely. A study by the Kauffman Foundation showed that over 2/3 of the jobs that were created between 1980 and 2005 were created by new companies. And that's only more now. They're not created by large companies or government so much so. They're created by new companies.
So those big companies are the ones that are lobbying for, say, changes in the immigration law. But you say that the smaller firms or the startups, they don't really have a voice in policy.
Yeah, I think that's one of the big concerns I have about the immigration law is that we need a startup visa. And if we don't, we're going to lose those very people who are in my class, who are those people who create the jobs. Canada is making a strong play for them. So all they have to do is go to Toronto, and they'll welcome them with open arms.
Very quickly, Bill, who's hearing this? Are you getting traction with this idea?
Yeah, the Kauffman Foundation has been a big supporter of this, but we're up against big lobbies.
Bill Ollett with MIT. Thanks so much.
Thank you, Bill. Pleasure to be here.
And coming up, does it send a message when a fabulously wealthy executive, Sheryl Sandberg of Facebook in this case, when she hires an intern and then doesn't pay that person? Is it legal? We'll get into this next on First Business. Sheryl Sandberg back in the news. You remember her, the COO of Facebook, in a bit of a mess again. Lean In, that's the name of her book about working women. It's also the name of a nonprofit that aims to fulfill some of the goals of the book, including equality in the workplace. And the other day, there was this job posting for an intern position for Lean In, an unpaid position. Well, first we were told it was to be a volunteer, but things seem to be changing. Let's talk to Kristen Prinz. She's a business attorney who runs the Prinz Law Firm. What did you react? How did you feel when you first heard this?
I felt like as long as they're abiding by the law and it truly is a volunteer position, it's fine. I mean, it's a not-for-profit.
But it is not a volunteer position. This person's doing work.
Well, non-for-profits and public entities are actually exempt from the Fair Labor Standards Act, which is the law that requires that businesses pay their employees at least minimum wage.
So that's where the conflict is that the person was, in fact, doing volunteer work and not getting paid, no matter, even if that person knew that going in.
Right. Well, the conflict, I think, in part came from the fact that Ms. Sandberg had just recently sold a huge amount of stock and made, I think, approximately $91 million. And to see that her foundation is going to hire an unpaid intern, the reaction is more political than based in law.
Okay, so it's not a technical violation of the law. It's legitimately taking advantage of that exemption, which covers what, religious issues?
Religious entities, charitable organizations, and public entities. But private, for-profit entities can also take advantage of free interns if they meet certain additional requirements.
It's kind of confusing. Do you typically hear of people talking about how interns are being used in such a public way?
Probably I hear it more so than other people hear it because of my job, but in the media you don't see this as a common issue. And I think this really highlights the criticism that's on Ms. Sandberg as a woman, because you don't see male COOs or CEOs being criticized for their charitable organizations taking advantage of an exemption. It's actually pretty reasonable for a business or a charitable organization to take advantage of something like this where you can get volunteer time.
The double standard, it still exists.
Yes, it does.
Kristen Prinz, thanks so much.
Thank you, Bill.
Going against the herd in trading preferred shares. You'll learn about it in Chart Talk next. Call this segment Chart Talk. Let's talk with Matt Shapiro. He runs the investment advisory firm MWS Capital. So, Matt, are we seeing a little panic in the markets right now?
Yeah, wait, I thought we were in 2013 and investors promised themselves they're not going to panic because they're all in ETFs and allocation strategies. But that's exactly what they are doing, and they're panicking, especially in dividend and large income shares, specifically the preferred stocks and the preferred stock ETF.
Now, what is that called? It's not an ETF, it's a PFF?
That's the symbol, yes, Bill. And, you know, back a few years ago, preferred stocks were kind of a quiet part of the market. You know, a guy might call his broker and say, I want to buy a preferred stock in a major bank, and it pays about 6% as a perpetual. Good investment, especially good for a conservative investor. Well, over the past couple years, of course, rise of these ETFs, everyone going into these pre-packaged, processed investments, especially in the income area. And guess what just has happened over the past 3 months? Interest rates have steadily risen, and investors are heavily, as a herd, selling these income shares and pressing the stocks of these preferred shares down to yields of 7%, which historically is really good. Most fixed income over the last 100 years returns about that. So here we are in a panic situation where you can very easily get strong credits in bank preferred stocks that yield 7%.
Okay, that's because basically you're going against the herd right now.
Exactly. Everyone promised themselves not to panic. They'd buy these ETFs, and of course the underlying stocks in them are not owned by anyone anymore, so they're for sale and they're easy to pick up, and there's these great yields available.
This happening on the bond side too?
It is as well. You know, this has been one of the quickest rate rises we've seen actually in about 50 years. So yesterday, the 10-year bond touched almost 2.9%, the 30-year about 3.85%. And lots of corporates and the like are approaching yields really that were very good and comfortable in 2006 and 2007. So I think we're going to return to these much better yields as soon as investors just sort of settle down and accept the fact that these better yields are here to stay and that they can really take them and not be so afraid that they're going to suffer losses as rates continue to stay at these levels.
All right, Matt, you have a good day out there today.
Thank you.
And as we say in the business, that's a wrap. Tomorrow, we'll talk about how a plan to create the world's largest airline could impact thousands of flyers and their perks. We hope you can join us. From all of us on First Business, I'm Bill Mahler. Have a great Tuesday.